Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof of your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest.
I got a bad feeling about this.
Jim Norton is in the house. Welcome.
Thank you. Glad to be back.
Glad to have you with us. Let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And, you know, we look every day to see what we're going to celebrate for the day. And, you know, we looked at it today and you just got to say, ho-hum. There's not a whole lot really on the calendar.
It is what it is.
You know, some days we get so much to celebrate, and then there's days like this when you look at it. And I asked Josh before we go live every day, you know, what are we celebrating? And we looked at it today and said, it's just one of those days that it is what it is. So we're going to pick the one that's closest to anything that sounded pretty interesting to me. And yes, I do have a warped sense. Most people who know me say that on a regular basis. So what is the celebration? Well, today is National Protect Your Package Day. Now, listen to Norton over there. Now, I know where Norton's going with this, and you know it's trouble. I was on a call early this morning, as I am most mornings, and somebody made the comment that they did that when they were in hockey, and the host of the call had not heard it. Didn't pick up on what he was referring to. No, they're not talking that way. They're talking about porch pirates. So my question of the day is, have you ever had anything stolen by a porch pirate? Put it in the chat if you have or have not. Let us know. Have you ever had anything stolen from a porch pirate? Now, I don't have to worry about that problem. My wife shops so much that I think the Amazon and the UPS guys both have keys to the house. I mean, it's probably, they're there at least once a day, sometimes twice a day. Now, sometimes it's not, not our fault that they're there twice a day. You know, we've ordered 3 things in the morning or the day before or whatever, and they deliver them in 3 different packages, 3 different drivers.
I like the 4 a.m. one.
Yeah.
I was like, wait a minute, why is my ring going off? And then I realized Amazon.
There you go. Have you ever, okay, so Jim Norton, have you ever had anything stolen from the porch pirates?
I've never had any stolen, but I have gotten in trouble for touching something that I wasn't supposed to be touching.
Well, we're not talking about that. This is a family show.
That's a family problem. But no, it's I've never had. Actually, we have a pretty decent neighborhood as far as anybody. I think they'd all get caught on camera. We got a lot of cameras on our street.
Yeah, well, you know something. I live in a pretty decent area, and there's a very, very exclusive part of Anaheim Hills right below me, and the helicopters overhead are there almost at least once or twice a week. So the home invasions. Josh, have you ever had anything stolen? No. Now here's the sad part of this story. If we had something stolen from our porch, we probably wouldn't know it because there's so many packages there all the time. Have you ever watched those things on social media about the spoofs where people set up the guys that are
Stealing
stealing?
package. And
Yeah, they put
those are great.
put some of your dog manure in there and all that kind of good stuff. I digress. I think this show's gone downhill. We know something now. We can have a Jim Norton take over for Bill. Josh, we have Jim in here to take care of for Janishak. So we used to always have Janishak come in here whenever the ratings got too high. So he would bring us down to earth. Now we've got Jim to help us.
There
with
you
that.
go.
Okay, let's see.
I'm your man.
You're the man.
That's right.
So let's see what the markets are doing today. If I can get my computer to wake up, which I'm not sure that will happen because they're as tired as I am right now. It's year end, and we're just trying to close the last few projects going. Yes, we're going to be out there talking with a bunch of real estate people next week who decided that they were going to wait for the last minute to get their continuing education done. So, there's another one.
It is what it is.
That update because I think I have to go do some.
Okay,
I think I'm going to do that
Tuesday
tonight.
and Wednesday of next week, Pachanga. It'll be fun. Okay, so let's see what we've got going on in the markets right now. The Dow Jones Industrial Average is up 263 points. NASDAQ is down 11. The S&P 500 is up 10. Oil's up 48 cents to $59.13 per barrel. So we've got some interesting stuff going on there. $59.13 a barrel, and California is still at $4.53 a gallon of gasoline. We have now gone under $3 is the national average, under $3 a gallon national average. But thanks to Governor Newsom, we don't participate in that here in California. Our gas prices still stay too high. And I don't know if it's true or not. Somebody had mentioned that there's another gas tax going in, or a gas fee going in the beginning of January in California. So I'm not sure if that is the case or not. You got to just love California, don't you? We have good weather. Of course, it's a little chilly out right now, but we get to pay the price for living in such a great area by having the worst governor. I guess Tim Walz is probably on the line right now for being the worst governor. He's got some serious problems going on out there in Minnesota when they've given away $1 billion of taxpayer money to Somali terror groups. Supposedly. I don't want to get in trouble. I don't know if it's true or not. That's what the allegations are. That's what the assertions are. We'll see what's happening out there. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Got a great broadcast lined up for you today. We're going to chat about why did the markets go the way they did. We've been telling you right along about the soft labor market, and so many of even the Fed members, and my thinking about a lot of the Fed people.
Such an idiot.
Not the brightest tools in the world, but the labor market. Now we're getting proof that it is softening. 3 housing market questions coming up at every gathering this season. And here's managing an inheritance, what most people get wrong. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Mortgage Minute today being brought to you by rsrlinks.com/mobile app. rsrlinks.com/mobile app. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. They tell us the number you need to put in your mortgage calculator to determine your principal and interest payment. If you don't have a mortgage calculator, get it. It's free. rsrlinks.com/mobile app. And if you want to know our thoughts about the market each business day morning, as early as the data allows, aren't you a member of the Ron Siegel Radio community yet? rsrlinks.com/HBOD. Guess I got that one out of sequence. But let's take a look and see what rates did yesterday. Most of them were up. Okay, we got the conventional 30-year fix. It was the only one that was down, 6.209. Jumbo 30-year fix, 6.448. That was up. FHA 30-year fix, 6.052. That was up. VA 30-year fix, 5.837. That was up. USDA 30-year fix, 6.093. That was up. All of them up on the upside. And as I mentioned a little bit ago, join the Ron Siegel Radio community. It's free to you. rsrlinks.com/HBOD, rsrlinks.com/HBOD. Let's see what the markets are doing today. This is real time if you're listening to us on ronsiegelradio.tv. If you're listening to us in the afternoon on ABC News and Talk, well, this is what was going on when we were broadcasting live this morning. S&P 500 is up 17.88. 10-year Treasury is down 2 basis points, which is very meaningful. When you hear 2 basis points, it doesn't sound like a lot, but it's broken below the 25 and 50-day moving average. If we hold that, could be going down to 4%. Maybe we'll get even lower. The mortgage bond, that one is up 8 basis points. Remember, when the bond goes up, rates go down. So it's up 8 basis points. That means as of right now, interest rates are on the mortgage side, they're going down. So we like that one. Why is all this happening? All that's available on that super secret website, google.com. Of course, does anybody Google anything anymore? Or do you chat GPT it, or what are you using? Gemini.
Yeah, it's built in.
Okay, so we'll chat about that in a minute. What the heck? ADP is the reason. So the highly anticipated ADP employment report showed that there were 32,000 jobs lost in November. Much weaker than the estimates of somewhere between 10 and 40,000 job gains.
Such an idiot.
Looking at the last 4 months in total, there have been 17,000 job losses, which really shows the weakness and direction of the labor market is heading in. Looking deeper at today's report, small businesses lost 120,000 jobs. While there were some gains in medium and large establishments, but this should be a canary in the coal mine. Small businesses employ about 50% of the labor force and usually show pain first when things slow down, as they are not as big and don't have as much flexibility or options. When things slow, small businesses often have to cut the largest expenses they have, which is labor. The sector breakdown was also weak. ADP tracks 10 different sectors for jobs, 6 of which showed losses. The biggest loser was professional business services, while the biggest gainers were the usual non-economically sensitive education and health services and leisure and hospitality. With the holidays, leisure and hospitality may be getting a boost because of seasonal travel. Turning to wages, workers staying at the same job saw their wages increase by 4.4% year over year, which is a deceleration from 4.5% in the previous report. The big story was job switchers, those changing jobs. Pay increases moderated significantly from 6.7 to 6.3. The premium of switching your job versus staying, or the difference in pay increases between job switchers and job stayers, has narrowed to under 2%, the smallest difference in 5 years. This is another metric showing that the labor market is weak because there is less poaching. Bottom line, weak report on all fronts after the release of the odds of a rate cut from the Fed next week are just under 90%. The Fed futures can be volatile But again, as we get closer in the week of the meeting, they're usually very accurate. The only other report due for release that could change things is Friday's PCE inflation report, but we expect core inflation to be pretty tame. Be very interesting to see if the vote is a highly contested one on December 10th. But one would have to imagine today's ADP report showed some clear reasons why the Fed needs to get ahead of the labor market weakness we are seeing. BLS jobs report for October and November will be released December 16th, which is after the Fed meeting. That may be a good thing because the weakness within today's ADP report will mostly be concentrated in small businesses. And you know, the BLS idiots, they don't get the small business numbers correct. They model it and they use this birth-death model, and it's never accurate. That's the Mortgage Minute, brought to you by our friends at rsrlinks.com/mobile app, rsrlinks.com/mobile app. So we got Jim Norton in the house, and we were talking before the break or during earlier. Jim's a Geminier.
Okay, I'm not just a Gemini.
You're the Geminier?
I'm just playing. I just started playing with that.
Okay.
Now remember I'm not the expert, so I could get this a little bit off. But when you type something into Google and it gives you that AI response,
right?
That's on the Gemini model, but you're not talking to Gemini.
Okay.
It's like ChatGPT. You got to go into it, and then you can change what you do a little bit. I'm liking the way, as far as search engines, all of these where they can cut through a lot of red tape. But you do notice when you're doing something in, let's say, in real estate specifically, you do notice that AI is very literal, and so you've got to keep. Sometimes.
What do you mean by literal?
Well, like you ask it, can you tell me how many homes have sold in the Hawthorne area or something in the South Bay? And so it'll give you a summary, but that might not answer your question. So you've got to ask it again. You've got to. It's back to that old saying: garbage in, garbage out.
Yeah.
So it's you got to be focused on what you're asking. It just doesn't interpret everything for you. Although it does do a good job because it saves you a lot of search time, especially when you're shopping on Amazon.
So here's the thing: is we got very, very brief when we were Googling things.
Mm-hmm.
What's Jim's first name?
Yeah.
Right. In the AI world, the more detailed you are, the better your response is going to be.
Definitely.
You have to tell it, don't hallucinate.
You definitely see that when you're using ChatGPT. What's really interesting is you can say something in a ChatGPT, or you can type it in however you want. You can do rather loosely. It'll formalize it for you, and then you can look at it and, because let's say you're thinking something out loud and your thoughts aren't organized to type it in correctly. It'll straighten it out, and then you can kind of adjust it from there. But it's not where it's. I'm not sure if it's any different than telling Siri to, dial the office. Because sometimes Siri goes, "I don't have an office."
But Josh, you might know this one better than me. That I think Siri is being switched over to the Google platform or the Gemini platform. Josh will let me know because he's way more.
I wonder too. I heard something about they were doing some kind of, they were using the Gemini chip or something.
Okay, they're working with ChatGPT, according to Josh. He knows a lot more about this stuff than I do. Now, here's the thing I've found, because I use AI a lot. I'm on there probably an hour, maybe more a day. And you have to, I call it the 10-80-10. So 10% is the way you prompt whatever the GPT is, whatever the AI is. Then AI will do the next 80% for you. And if you don't do the 80% at the end yourself, you've got a lot of potential for problems.
Right.
And working with Google to combine. Okay.
Yeah.
So, 10-80-10 is my thought. But, I look and say, okay, who's got the best search engine in the world? It's Google.
Yeah.
So if I'm looking just for search engine type things, I'm going to go into Gemini and search for it. Now, I also find Gemini to be the best of the graphics groups.
Oh, okay.
If I'm doing research, I'm looking at ChatGPT or Perplexity.
Oh.
Copywriting, I'm using Claude.
Wow,
so it's just a matter of now the funny part is all of these things are going to change next week. Not literally, but because they keep jumping and they keep going from one to everything one company finds, the next one says, "Oh, okay, I got that. I'm going to do that now."
Yeah,
and they kind of hopscotch each other.
right. But the one thing you can't do is you can't apply it to real estate. Like Google, our ChatGPT. I'm looking at 12 Main Street versus 13 East Street. Which house should I buy? It'll just give you facts. It runs out there, and sometimes it gives you a lot more facts than you want. So as coming into real estate, you still have to be careful about what you're researching, because it is taking Zillow, Redfin, a bunch of the others, like, is right now a good time to buy? Where the usual question is, a good time to buy? And it's like, it doesn't answer the question that way. Like there's a logical answer, but it'll give you a lot of different alternatives, which could either confuse you more or clear it up depending on your perspective.
I use it for some of that stuff. And what I've learned over the time is you have to give it background. Mm-hmm. So you start off on any of them and you say, you are a real estate expert with 40 years experience in the Orange County or the Anaheim Hills market. I have a family of 4 with kids that are X age and Y age, and I have an hour commute to work, and get real specific. Mm-hmm. And I'm considering 123 Main Street or 1225 Broadway. Can you analyze these two for me?
Yeah. And
if you get that specific, or what other information do you need to give me a great analysis of these two properties?
You get that's really one thing I like about ChatGPT is when you go down, if you read the whole response, you always get to that last sentence. Would you like? There are 12 others, or I could expand this by 12 lines. Would you like me to do that? And all you got to do is say please, and it'll give you that more detail. It's interesting.
But ask it also that question at the end of your first prompt. What other information do you need for me to give me the best answer possible? We're going to talk more with Jim Norton when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. 3 housing market questions coming up at every gathering this season. Managing an inheritance, what most people get wrong, and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. 3 housing market questions coming up at every gathering this season. Easy for me to say. Whether it's at a family gathering, your company party, or catching up with friends over the holidays, the housing market always finds its way into the conversation, especially at our company party because we're in real estate. Here are the top 3 questions on a lot of people's minds this season, and straightforward answers to help you feel more confident about the market. 1, will I even be able to find a home if I want to move? Yes, more than you could a year or 2 ago. The number of homes for sale has been rising over the past few years. According to data from Realtor.com, There have been more than 1 million homes on the market for 6 straight months, something that hasn't happened since, drum roll please, 2019. If you're watching us on RonSiegelRadio.tv, any of our socials or the ABC News and Talk AM 1490 or FM 98.1 video feed, you are seeing that graph. There are more than 1 million homes on the market. That means 2 things. Buyers have more options. Sellers have more places they can move to next. Many homeowners who held off are realizing the shelves aren't bare anymore. So if you hit pause on your home search last year because nothing fit your needs, it may be worth another look. With more homes on the market now, you're not competing for the same handful of listings like you were a couple of years ago. And because there's a bit more to choose from, homes aren't disappearing the minute they hit the market. That gives buyers more space to breathe, more options to compare, and a little more time to make a confident decision. Number 2, will I ever be able to afford a house? Affordability is starting to improve finally. It's been a tough few years for buyers, but this year brought some much needed good news. Mortgage rates have been easing, home price growth has been moderating, and wages are up. What goes into affordability? Interest rates, home price, and wages. That adds up to a monthly mortgage payment that's hundreds of dollars lower than it would have been just a few months ago. Again, take a look at the graph. Monthly mortgage payments are trending down. Buying still isn't easy, but the numbers are starting to improve for a lot of people. That means buying a home is becoming more realistic goal. If your realtor and your lender are not having the goal discussion with you, find someone new. Just my opinion, and I'm right. Because your realtor and your lender need to know your goals. How can they give you professional guidance if they don't know where you're trying to go? It's like getting on the freeway and saying, Siri, take me to breakfast. And it says, whoops. And so if you can, Josh, were you able to hear that?
Siri decided.
Okay, so Siri answered that question for me.
I'm out. Siri's in.
Yeah, Norton's out.
Bummer.
That's kind of funny. We couldn't have planned that better, Josh. I'm glad that came through on the. I don't know where you are. Buying still isn't easy, but the numbers are starting to improve for a lot of people. That means buying a home is becoming more realistic. If you want a second look at whatever pricing you've been given or whatever information you've been given on buying that new house, on financing it, rsrlinks.com/2ndlook. Second look, rsrlinks.com/2ndlook. Number 3, should I wait for prices to come down? A lot of people worry that the housing market is about to crash, but the data doesn't point in that direction. Yes, the number of homes for sale has been rising, but it's still nowhere near the level needed for prices to fall significantly on a national scale. On top of that, homeowners today have a lot of equity and are in a much stronger financial position than they were back in 2008. Of course, every local market is a little different. Some areas are still seeing prices climb, while others that saw huge spikes a few years ago are leveling off or seeing small corrections. But overall, the national picture is clear. Experts surveyed by Fannie Mae project home prices will keep rising, just at a slower, more normal pace. Again, if you're watching us on RonSiegelRadio.tv or our socials, you see a chart. Home prices will rise moderately. According to Fannie Mae, 2.42 in 25, 2.08 in 26, and then in 2029, 3.57. That's why waiting for a major price drop to get a deal isn't a very strategic plan. History shows the same thing over and over. People who spend time in the market tend to build the most long-term wealth, not people who try to time the market perfectly. Bottom line, talking about housing market can feel loud and confusing, especially when you're hearing so many different takes. If you want to understand what these trends mean for your goals, give me a call, 800-306-1990, 800-306-1990. That's the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. Continuing our conversation with Jim Norton, who's been in the real estate industry since the turn of the century or before.
When the wheel was invented?
When the wheel was invented, when they still had log cabins.
MLS was actually a book.
Yeah, that's right. So Are these the questions you think that you're going to hear this holiday season?
Definitely. Let's circle back to the one in the middle, the number 2. You said, how when will I ever be able to afford a house?
Right.
It's like, well, what are you doing right now? Well, I'm renting. And it's like, well, have you been looking? And it's like, well, no, because I looked at my parents' neighborhood and everything's $1.5 million. Why are you looking in your parents' neighborhood? It's sort of like your job career. You start at the bottom of the ladder. You learn how the company works. You learn what it is. You work your way up the ladder. Then you maybe move to a different company or you get promoted. It depends. It doesn't really matter how you approach that, but you always start at the bottom. So in the real estate market, start at the bottom. Condo, townhome, what's affordable? Maybe you have to go a little geographically different than where you want to end up. But if you're not in there, like say you're renting an apartment in Irvine, the odds that you're going to just buy immediately in Irvine aren't that good. But maybe if you go over to a different city or something, you could find something you can afford, build up that equity. I don't understand is that even with the stock market, nobody gives you free equity like real estate.
Right.
It's 3 to 5% on an annual basis historically. That beats any real estate market. Any stock market trade out there, with the exception of, let's say, Nvidia, had a nickel. But you follow what I'm trying to get at. You've got to get in there. You've got to take that money you're just throwing away on rental, and put it to work so that you can build it. And when you're 20 something, 5 years goes by faster than you think. That's I get to look back and now and say, boy, 5 years went fast. And then you can have that equity. You've got that. You can sell out, or you can whatever you want to do, but you can then start moving up that ladder.
Isn't it fascinating? So you're looking at using your example, you've got that apartment in Irvine, and you're looking at maybe a 1 or 2 bedroom apartment, and it's maybe I don't even know what apartments are anymore. 1,000 square feet, 800 square feet.
Let's say you're picking on Irvine. I gotta think 1 bedroom is going to be above $2,500 a month.
Oh yeah, it is. But
I'm
not even talking dollars yet. I'm talking about
square foot.
Yeah, the square footage is
850 probably.
850 square feet. Okay. Yeah. So now you say, okay, I'm going to compare my 850 square foot apartment that's probably costing $2,500 to $3,000. A lot of the apartments in Irvine are the Irvine company. They're expensive. Mm-hmm. And you have to, and a lot of people don't tune into the fact that it's going to take you 20 minutes to get from the entrance of the community to your parking level, because they're in those circle things that you have all the structures. Yeah. But I digress.
Yeah.
But you're looking at an 850 square foot apartment. It's maybe 1 or 2 bedrooms. And then you go to Irvine and you say, I can't afford to buy that 3,000 foot house. Well, you weren't living in 3,000 feet. You were living in 800 square feet.
Yeah.
Go look for the 800 square foot apartment or condo, like you said, right, or townhouse, and you're probably going to be very close. And then you look at it, you give us a call and you say, hey, what kind of down payment assistance do you have? Because there's all kinds of down payment assistance programs out there.
There's so many programs out there it's just so many different ways. Even available to you sometimes in credit unions, but I don't even know how many products you have that have that.
Well, last time I looked at down payment and assistance resource, I think is the name of the site. Mm-hmm. And I don't hold me to that because I don't remember it, but there was like 352 down payment assistance programs.
But what's your right now? What is your best product in terms of lowest down?
Oh, nothing. Maybe there's some that'll do nothing down. There's some that'll be like 1% down, 2% down.
There you go.
So you look at a $400,000 property, and yes, I know of somebody that just bought a $400,000 condo in Yorba Linda. So you figure 400,000. Think about this one, Jim. It's holiday time, right? Okay. $400,000 at 1% down. What's our down payment? $4,000.
$4,000.
Now, I was at the Apple store yesterday. It was packed, right?
was doing the same thing in my. I know where you're going.
I think
I was thinking the same thing.
now call
You know,
Grandpa Jim.
You know,
and say,
a trip to Hawaii.
Yeah.
You decided you wanted to take cost you much as the down payment.
Right. Or your spring break.
Yep.
Right.
There
All
you
of
go.
those things.
That's it.
So you could buy a house for the same amount as your down payment, live there for 3 years, don't sell. Now, if you have to refinance it to take some of your equity out, because you're going to have a bunch of equity. If you don't have to refinance it, don't worry about it. But save while you're there and go buy another one. Rent out the first one.
I mean, that's just getting ahead of it. But if you want to, if your goal is to get that
Retire. Oh, sorry.
I don't what's that word mean? I haven't tried to figure that one out. But your goal is trying to get to that 3,000 square foot house, then maybe you do sell the first one. I like you, I recommend collecting as you go, because you're going to look back and that first house is going to be cheap. You're gonna do better. You're gonna get better.
So maybe we'll do the. I did this broadcast. We've done it many times. It's been a while since we've done it, Josh. The retiring on $18,000 a month with no IRA, no 401k, just using your real estate and your mortgage. So I think that we're gonna do that. I think tomorrow. But you know, there's a lot of ways to retire, and I just gave you one of them. Chatting with Jim Norton. Stay in that house for 3 to 5 years, buy another one. Stay in that house 3 to 5 years, buy another one, and do that over and over until you, from age 25 to 55 or 45. By age 50, you can retire because you're going to have a lot of money coming in. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, managing an inheritance. What most people get wrong. Hi, Libby. Good to see you here. What most people get wrong and more. Reach me anytime. Off-air number 800-306-1990. We will be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Borrow Smart segment today being brought to you by GetHomeSelect.com, GetHomeSelect.com. Most people think an inheritance is like winning the lottery. Free money to spend however you want. But here's what nobody tells you. An inheritance handled poorly can actually set you back financially. Seriously. I've seen it happen dozens of times in my 40 years in this business. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. So you've received an inheritance. Maybe it's from a parent, grandparent, or another family member who cared enough about you to include you in their estate planning. First, my condolences. If someone left you money, chances are you're dealing with grief, and that's important. Here's my first piece of advice. Take your time. Don't make any major financial decisions while you're grieving. The money isn't going anywhere. And most decisions can wait until you've had time to process everything. Now, here's where most people go wrong. They think they need to keep the inheritance exactly as they received it. Maybe it's stocks their dad owned or a rental property their grandmother had for 30 years. They feel like changing anything would be disrespectful. But here's the truth. What made sense for your relative's financial situation might not make sense for yours. Your parents might have been in their 70s with no debt and different risk tolerance. You might be in your 40s or 50s with a mortgage, kids heading to college, and credit card debt at 24% interest.
Ow!
This is where strategic debt management comes into play. Remember, strategy beats rate always. Let me share a client story. A woman I'll call Susan inherited $150,000 from her father. She had $45,000 in high interest debt, credit cards, a car loan, some medical bills. Her financial advisor told her to invest the inheritance. Sounds smart, right? But when we looked at her household blended interest rate, she was paying an average of 18% on her debt. Ow! Even if her investments returned 8% annually, she'd still be losing 10% every year. That's not strategy. That's math working against you. We repositioned her debt strategically, improved her monthly cash flow by $1,200, and then invested what was left over. Now her money is actually working for her, not just sitting there while debt compounds against her. Here's another thing people miss: tax implications. If you've inherited an IRA, there are specific rules. Non-spouse beneficiaries generally need to distribute the entire account within 10 years of owner's death. If you don't know that rule, you could face penalties that eat into your inheritance. I am not giving tax advice. Check with your tax advisors about that to see if I'm right. And speaking of rules, estate laws have changed specifically over the years. What your neighbor told you 5 years ago about inheritance taxes might not be accurate today. So what should you do? First, don't go it alone. The laws, choices, and potential pitfalls are complex. You need experienced professionals, and I don't just mean me. You might need an estate attorney, a tax advisor, and someone who understands strategic debt management. Second, think about your own family situation. How does this inheritance change your financial picture? Should you pay off debt, reposition your mortgage, increase your emergency fund? These aren't one-size-fits-all answers. Third, evaluate everything through safety, liquidity, and return in that order. Is your inheritance in a safe form for your situation? Do you have access to it when needed? And only then, what kind of return can it generate? Here's what I tell everyone. The goal isn't to keep the inheritance exactly as you received it. The goal is to honor your loved one's legacy by using it to genuinely improve your family's financial future. That might mean repositioning assets, paying down strategic debt, or restructuring how the money is held. It's about suitability for your situation, not just what was suitable for the person who left it to you. Bottom line, if you've received an inheritance or expect to in the future, let's talk about how to integrate it into your overall financial strategy. Head to rsrlinks.com/keysteps, rsrlinks.com/keysteps to get your financial house in order, or give us a call to schedule the conversation, because an inheritance isn't just money. It's an opportunity to build lasting wealth for your family, but only if you handle it strategically. That is the Borrow Smart segment, brought to you by GetHomeSelect.com. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management, reminding you, strategy beats rate always. Strategy beats rate always. Again, Borrow Smart, brought to you by GetHomeSelect.com, GetHomeSelect.com. Continue our conversation with Jim Norton. He's in the house chatting a bit about strategies, real estate, holidays, AI. Kind of covered a lot of ground today, Jim.
You just covered the strategy one. That's a big issue. And then, we talk about the future, what projects for next year.
Right.
Right now, I think Zillow, because the reason I say that, Zillow dropped their projections for next year out. I think I was asking you earlier about Chapman. They always drop I like Chapman's study because it also has a local section.
And they're correct usually.
They're pretty close.
They're usually
closer than UCLA as far as.
Well, we always compare to UCLA, and I say we because I was on the staff at Chapman for several years.
Yeah. But right now, there's just nothing major. Nobody's predicting anything major in terms of changes. One of our housing problems still is inventory and supply. Let's just call it supply. That's builders aren't building the affordable products fast enough. If they are, they're going high, and I'm not sure if people in California are having trouble adapting to high rise and higher type of thing. But some of this stuff, it looks like they're building. They're building something that's going to be multi-story, but it's really just a 3-story townhome or something. And the stairs a lot of people are anti-stair,
That's because you're getting old, Jim.
Well, maybe I am, but at the same time, it's like you've got to look at all the different products that are out there, but they're not, the supply of different products isn't being built. California still has not solved its housing entitlement issues. they keep saying they're going to make it quicker. They're going to say make it faster, but it's just smoke and mirrors.
Yeah, it's kind of I just saw this morning on the news, they were talking about the city council in Los Angeles trying to remove some of the fees, or the state legislature removing some of the fees just to rebuild in the burn areas.
Mm-hmm.
And they won't do it.
Right. It's still
and if you can't do it there, you're not going to do it for
you can't even get a straight answer on who's being able to rebuild. I mean, some of the stuff you see rebuilt, it was already permitted before the fire. It was already in process. There are a few people that are diligent and able to get something done, but heck, there's I think there's 3 to 5 lots still from the fires in Yorba Linda. I'm not even sure about the fires in Anaheim Hills. Remember that caught by the edge of Anaheim Hills by the Eastern Corridor? I'm not sure how many of those are not rebuilt, but that's been years. So it's not something that's real simple. And then, of course, as you said, we're going to get, add to the affordability problem. Insurance is not going to go down. Insurance is going to still be a big factor in.
Well, we know exactly when insurance is going to go down. I can tell you exactly when it's go down, but I don't know that it'll happen. So the only time we're going to see insurance go down is if we get tort reform.
Yeah.
Because right now it's so expensive that they've got to. I mean, you look at it and you say,
tort
okay,
is something I eat, right? That's a dessert. Why don't you explain that?
Because I
think you just lost half your people.
Legal reforms. I mean, that's the whole thing. Is there's, you get a lawsuit for everything, and then it's billion-dollar lawsuits, and you look at some of the companies and they say, well, you can't turn off the power, but if the power is on and it causes a fire, then you're liable.
Yeah.
Right. And and I can understand how some of these people, it does hurt people when you turn off the power or when their house burns down. I get it. But what's the power company supposed to do in the middle? Right. So if they don't have something where they're limited liability, they should have a liability maybe to repair and replace or something like that, or offset some of the insurance costs.
Right.
But how do you deal with that?
Everybody wants to point the finger at somebody else for it, and then see if what they can get out of it. I mean, what's probably the biggest advertiser on television are attorneys.
Sure. Personal injury attorneys.
Personal injury or property injury, property related or something. But yeah, it's like, it's just crazy. I mean, insurance, it's almost getting to the point where a buyer comes to you. It's like, I'm looking at houses in the Anaheim Hills area. It's like, okay, have you pre-qualified for your mortgage? No. Have you pre-qualified for your insurance? I mean, have you checked that? No, I didn't even think about calling my insurance. What's the deal there? It's like, hey, it's Anaheim Hills. It's fire. It's fire risk is higher. It's like
cost of fire insurance is a major component now. Yeah. Used to be that we looked at, okay, we knew what the property value is,
right?
Give or take. We had a good idea of what insurance is. I share that with you every morning.
Right.
We have an idea of what the property taxes are.
Yep.
We're clueless as to the insurance.
As the risk factor.
If you can even get insurance.
We don't know if it's been involved in a risk situation now or what. Yeah, it's become a factor that's just added more onerous to the process of buying something.
So the bottom line is you got to get educated.
You gotta, and I don't mean just, just reading the Zillow estimate. You gotta look at it. You got to go down back to our favorite mantra. I'll leave you with this for the end of the year was always who's on your household board?
Right.
Do you have an attorney that you can speak with without paying a fortune? Do you have a realtor that can tell you exactly what's going on, not how much commission they'll make? Do you have an accountant that isn't QuickBooks or whatever the one is,
right.
Quicken? I mean,
tax strategist is what you really want.
Those are great products, but they don't talk strategy.
Right. It's all about the strategy. And if you want to talk about strategy, give me a call at 800-306-1990, 800-306-1990. And as always, I ask, set that first radio preset button to come back here and join us every day on Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.